There is nothing like finding out your favorite dividend stock is doing okay without a boatload of debt. Holy banana bread, let's do this. I know many of you love those high dividends, but there's always a danger when you are chasing those high yields. Often, some of the higher yields are absolutely unsustainable, and those dividends are often wrapped up in levels of debt that could ultimately affect your investment. Luckily, there are some high dividend stocks that are an exception to that rule. Before we drizzle our portfolios in extra dividends, tell me in the comments your favorite dividend stock. Thank you for dropping in on the home of free financial content on YouTube. While you are here, please like and subscribe as you don't want to miss a single moment, and a huge thank you for that click. In a moment, we will jump into the 7 companies I have found for you, but before we do, I want to drop a few qualifiers I used to narrow down this list. First of all, we only wanted yields over 7% and also had debt-to-equity ratios well under 100. If their dividend payout ratio is also under 100, that would be a bonus. But it would be forgivable if not, as they have plenty of room debt-wise to get that sorted out. However, I think in this case they are all under 100. So without any further ado, let's do this. Kicking off our list is Freehold Royalties with a ticker of FRU. They are based out of Calgary, Alberta, and they are a subsidiary of Freehold Resources Ltd. They acquire and manage oil and gas royalties in Western Canada, as well as in some parts of the United States. Their market cap is $2.31 billion, and they have a beta of 2.22. Their earnings per share is 1.34, and their price to earnings ratio comes in at 11.43. Their debt to equity ratio comes in at a very nice 20.67%. Jumping over to dividends, they have a yield of 7.05%, which is paid out monthly in the amount of 9 cents per share. Their payout ratio comes in at a pretty respectable 64.93%. When we look at their growth in 2021, they grew from $5.18 to $11.81 for a return of investment of 127.99%. And yep, when we factor in those dividends, we get a total return of 135.04%. Well, that's not too shabby. This year, their share continued to rise up to $15.32, and that is a bear market ROI of 29.72% and a total return of 36.77%. This is a fantastic start. Holy banana bread, we may be in for one of the better lists of the year. Up next at number 6, we have Goodfellow Inc. with a ticker of GDL. They are based out of Delson, Quebec, and they are a major manufacturer of lumber-based products from coast to coast with a strong international presence as well. Their market cap is $104.89 million, and they have a beta of 1.31. Their earnings per share is 4.48, and their price to earnings ratio comes in at 2.73. Their debt to equity ratio comes in at a very nice 26.25%. Jumping over to dividends, they have a yield of 7.347%, which is paid out twice a year in the amount of 50 cents per share. Their payout ratio comes in at a very, very nicely manageable 15.63%. When we look at their growth, in 2021, they grew from $7.85 to $9.55 for an ROI of 21.66%. When we factor in those dividends, we get a total return of 29.01%. This year, their share continued to rise up to $12.25, and that is a bear market ROI of 28.27% and a total return of 35.62%. This is a company that kind of didn't even register the bear market. There will be continued demand for lumber products into 2023, so we just may see much of the same when it comes to returns this year as well. We haven't quite gotten out of the forest yet. As our 5th pick, we have Acadian Timber Corp with a ticker of ADN. They are based out of Edmundston, New Brunswick, and they are a big-time provider of timber products in Eastern Canada as well as the New England states in the U.S. Their market cap is $254.13 million, and they have a beta of 0.90. Their earnings per share is 1.20, and their price to earnings ratio comes in at a nice little 12.54. Their debt to equity ratio comes in at 36.64%. Jumping over to dividends, they have a yield of 7.708%, which is paid out quarterly in the amount of 29 cents per share. Their payout ratio comes in at 96.67%, and I believe that may be the highest payout ratio on today's list. When we look at their growth, in 2021, they grew from $15.67 to $19.20 for an ROI of 22.52%. And when we factor in those dividends, we get a total return of 30.23%. This year, their share did slide back a wee bit to $15.05, and that is a bear market ROI of negative 21.61% and a total return of negative 13.90%. Acadian Timber did not do well with the bear market, but having lower debt, they have the room to recover without too much doubt. Not liking the short-term prospects of this one, but long-term will most likely be much better. At number 4, we have Pine Cliff Energy with a ticker of PNE. They are based out of Calgary, Alberta, and they are a natural gas exploration and production company. Their market cap is $559.82 million, and they have a beta of 1.03. Their earnings per share is 0.46, and their price to earnings ratio comes in at 3.48. Their debt to equity ratio comes in at a 2.89%. Holy banana bread, that's pretty fantastic. Jumping over to dividends, they have a yield of 8.123%, which is paid out monthly in the amount of 1.1 cents per share. Their payout ratio comes in at 10.19%. Wow, this is pretty good. When we look at their growth, in 2021, they grew from, 23 cents to 74 cents for an ROI of 221.74%. And when we factor in those dividends, we get a total return of 229.86%. This is mind-numbing, but you have to remember, they were a penny stock in 2021. This year, their share grew to $1.60, and that is a bear market ROI of 116.24% and a total return of 124.34%. I love the debt situation, but this is a penny stock that just grew up a wee bit, so that alone is still a wee bit of a caution. However, those numbers do look pretty darn good. We have a huge community favorite at number 3, and that is Canoe EIT Income Fund with a ticker of EIT.UN. They are based out of Calgary, Alberta, and they are a closed-end investment trust mainly focused on financials, energy, and healthcare. Their market cap is $2.16 billion, and they have a beta of 1.24. Their earnings per share is 1.57, and their price to earnings ratio comes in at 8.75. Their debt to equity ratio comes in at a very nice 15.99%. Jumping over to dividends, they have a yield of 8.74%, which is paid out monthly in the amount of 10 cents per share. Their payout ratio comes in at 70.06%. Now, I will add that normally the company aims for a higher payout ratio than that, so that's kind of interesting. When we look at their growth, in 2021, they grew from $9.85 to $13.33 for an ROI of 35.33%, and when we factor in those dividends, we get a total return of 44.07%. This year, their share did slow down a bit, but it still rose to $13.73, and that is a bear market ROI of 3%, and, a total return of 11.74%. Canoe is, it's still outpacing the market, and it is just one of those dividend stocks you kind of have to love. I do suspect we will see some impressive growth from Canoe when we move back into bull territory. Coming in our second spot, we have Dream Impact Trust with a ticker of MPCT.UN. They are based out of Toronto, Ontario, and they are an open-ended investment trust mainly focused on real estate development as well as lending and renewable power. Interesting combination. Their market cap is $276 million, and they have a beta of 1.46. Their earnings per share is 0.43, and their price to earnings ratio comes in at 9.60. Their debt to equity ratio comes in at a pretty stable 39.71%. Jumping on over to those dividends, they have a yield of 9.684%, which is paid out monthly in the amount of 3.3 cents per share. Their payout ratio comes in at 93.09%. When we look at their growth, in 2021, they grew from $5.91 to $6.22 for an ROI of 5.24%. When we factor in those dividends, we get a total return of 14.92%. Unfortunately, this year, their share took a pretty big dive, down to $4.13, and that is a bear market ROI of negative 33.60% and a total return of negative 23.92%. This one is just simply tough. They do have good debt, but it could still be a rough recovery for them. Nice dividends, but this one should make your spider sense tingle a wee bit. Coming in our top spot, we have Cardinal Energy Ltd with a ticker of CJ. They are based out of Calgary, Alberta, and they are an oil company that acquires, explores, and produces petroleum as well as natural gas in Alberta as well as Saskatchewan. Their market cap is $1.12 billion, and they have a somewhat volatile beta of 3.38. Their earnings per share comes in at 1.41, and their price to earnings ratio is a 5.04. Their debt to equity ratio comes in at a very cool 5.31. So let's jump over to those dividends. They have a yield, our best yield in the list today, of 10.141%, and that's paid out monthly in the amount of 6 cents per share. Their payout ratio comes in at a very cool 14.18%. Okay, let's jump into their growth. When we do look at that growth in 2021, they grew from 81 cents to $4.36 for an ROI of 438.27%. And when we factor in those dividends, we get a total return of 448.41%. Holy friggin' banana bread. This year, their share continued to climb all the way up to $7.10, and that is a bear market ROI of 62.84% and a total return in the bear market of 72.98%. The oil boom 100% helped Cardinal Energy big time, and I suspect when oil begins to go back up next, we are going to see some very nice returns again. This is a stock to watch for sure. Still, do your due diligence, but wow, just wow on this one. I think most of today's stocks really demonstrate that you can have safer, higher dividends. The big takeaway, besides some potential stocks for a heaping helping of due diligence, is that blindly chasing yields can give you lots of dividends. However, if you want to sleep well, not as worried about those companies, a little fundamental analysis can go a long way towards finding safer choices. The fun does not have to end here. Check out my video on TELUS that I will link on the left. Otherwise, check out the video on the right that YouTube thinks you will like. Your click will decide who is right, and I will see you in the next video.